Welcome everyone, it's the part 3 of the turtle soup series. It's the last part. What you will learn is the last conformations and type 2 turtle soup. In this part, I will teach the conformations like the volatility break, absorption, exhaustion, and the failed auction. So let's move on. If you didn't watch the part 1 and part 2, please go and watch these two parts because it's the last part. I will put the links in the description for moving into the playlist of the turtle soup. So, what's the type 3 turtle soup all about? The first one is we need to see the aggressive and bigger candle body, which differs from the other candles. It shows the aggression. It shows actually the impulsement in some direction. Like that, as you can see at the right here at this candle, this green candle. And the second thing about this type 3, we have to wait for price to go out the high or low of this aggression. As you can see, we have this aggression here by aggression, and the price came the first day to go out this low, and our next target with this turtle soup model is the next side of this aggression. The first one, we see this aggression right here, the price got the low of this aggression, and our next target is this high of the aggression. These aggressions and the impulsiveness on the price actually makes a lot of sense, and I will explain them at the order flow series. And these confirmations I will teach today is more about the order flow. Let's look at some examples here. As you can see, there is a buy aggression again. The price came and it took out the low, and our next target is this high of this aggression. Actually, you can look at here. There's also the short opportunity, which price took out the high of this aggression, and the price came down to the low of this aggression. Next example, as you can see, there is a sell aggression at the impulsive price range. The price first took out the high of this sell aggression and then came and took out this low of the same sell aggression. This right here is a buy aggression, the first for low and then high of this aggression. Also, we need to see some confirmations and techniques that we're going to use with the turtle soup. To conclude, I will say that for long position and short position, these actually drawings right here is enough to understand. The first one, as you can see, it's the buy aggression for long position. The first of all, we need to wait for the price came to kind of low, and then after that our confirmation, stuff like that, we're targeting this high. And right here is this sell aggression, price a little bit came higher and then manipulated the low. It's the turtle soup right here. We say that type 3 turtle soup, and our next target is this high. For short positions, it's the buy aggression, price came lower and then manipulated again higher, again this turtle soup. After that we are targeting the low of this aggression, and for that it's the sell aggression right here, price to cut the high of this sell aggression, and we are targeting the low of sell aggression. Okay, let's move on to the confirmations. I will teach them in most simple forms. By the way, the future lessons about these topics will be on the channel. Please stay tuned. Let's start with the absorption and exhaustion as a confirmation. Market orders by aggressive participants, we say aggressive market makers, absorbed by passive limit orders. A lot of orders executed and the volume formed, but price didn't move. This is called absorption. A lot of volume executed, buy volume or sell volume, and the price stayed in the same place. And in opposite, exhaustion is the price moves in some direction, maybe higher or lower, but what we see is that delta is not as we expected. Example for delta is the difference between the buy orders and the sell orders. Price moving higher, we should expect in the delta is positive, and the more volume in the buy side will be presented by what you can see is the buyers and the sellers are in the balance, and delta, I mean the difference, approaches to zero. It's the exhaustion. If you don't understand that, don't worry, because the more order flow lessons, I will recording them, volume profile, some footprint strategies and stuff like that will be on the channel as soon as possible. So most easy way to spot the absorption and exhaustion is cumulative volume delta. Also we can use other tools like footprint, volume delta, but most easy one is the cumulative volume delta. It shows the aggression. It's the most easy way to we use. We need to see the divergence between the price and the cumulative volume delta, or CVD in the short form. Where the turtles happen, there will be absorption and exhaustion for our entries. Example, the upper part is the price, the lower part is the cumulative volume delta. At the end of the video, I will show how to add these indicators on your chart. It's completely free, no cost required. In the price chart, the price made lower high, but in the cumulative volume delta, we can see the higher high. What it represents is the more buy orders are executed by it, but price didn't align with that. Price stayed in the same place. It's the sign of the absorption. And the exhaustion part, we can see the price break above this high, made higher high, but in the cumulative volume delta, we can see that the price made lower high. What it tells us is the buyers and the sellers, the difference of them approaches to zero, because the cumulative volume delta shows the sum of the volume delta for each bar. For opposites, it's the for the long positions. It doesn't matter. I think you understand a little bit. If you don't understand, don't worry, it's so easy and you will understand them in the future lessons. So let's move on to the next confirmations, which is called the volatility break. We need to understand what's the volatility. It means how much and how fast price move up and down in the market. We know that without manipulation, markets struggle to move. Each move requires manipulation, from my point of view. Actually, CRT and turtle soup is basically manipulation. With manipulation, the higher volatility we can expect. Without manipulation, there should be lower volatility. For measuring the volatility in the market, we can use the ATR, which stands for average true range. It's the free indicator. You can use it the trading view or stuff like that. I will teach them at the end of the video how you can add. So volatility breaks, or we can call them the volatility jumps. What are them? So let's look at the charts below. It shows the ATR at the trading view. As you can see, some places are their sudden jumps at the volatility. We're gonna use it in the confirmation, also in the CRT models and turtle soup models, where the turtle soup happens. Example, it's the type 1 turtle soup. Price took out the relative lows and aggressively closed above here. And what you can expect here, the volatility increasing suddenly here. So let's move on to the next confirmation. It's the failed auction. Actually, it's part of the auction market theory, but I will teach it at the future lessons. But now I want to teach a basic understanding of this. It may more confusing at the future because it's not as easy, you can see, but I will turn into the most easy form that you can understand. Firstly, what we need is the price breaks the balance zone. It's the volume profile, by the way, at the right of the chart. It's the volume profile, and as you can see, this place right here, where the more volume presented, is the balance zone or acceptance zone or higher volume node. or sometimes it's included in the value area. It has other terms. I will explain them in the future lessons. Price breaks from the high volume area or high volume node or the balance zone, and it couldn't find an acceptance or the fair price at the other of this high volume node. What the price did is the returning back into this balance zone, because no volume or acceptance didn't represent it at the higher prices. Example here, and it's true for the long position right here. Price breaks below of this zone, balance zone, and didn't find an acceptance or the fair price. That's why the price have to return back to this high volume area. We're gonna use it at the turtle soup, where the turtle soup should be happen at the low volume zone, and we have to keep our target is at the high volume zone. By the way, you shouldn't use all the CAN formations all at once. It's not correct. It's overcomplicating. You can just use one CAN formation with the turtle soup is enough for you. Don't use the also failed auction, also the volatility and stuff like that. It's should be confusing, and they keep it easy. It's the most important lesson that I've learned for years, keeping it most simple form. By the way, use the uncored volume profile starting from the 18, which is the starting of the session, the market closing and the opening at the 18 in the New York. By the way, it's the New York time. I will show how to add this uncored volume profile for free in the training view at the end of the video. So let's move on to the charts. Now we are looking at the gold 1 hour chart. As you can see there, here's the aggression. By aggression, the price came and took out this low, and then our next target is this high. Is 1 and 2 are risk reward, or you can use sometimes 1 and 4, 1 and 1. It's about your risk management strategy. Let's look at the width conformations that will be present here. Let's remove that one. As you can see in the cumulative volume delta, it's the CVD indicator. You can use other types of the CVD, doesn't matter. As you can see at the cumulative volume delta, after that manipulation, after that turtle soup, price and the cumulative volume delta created difference here. It's called the divergence, or this one is called here is the absorption. After that, we can find a valid entry for targeting this high, or opposite side, we can use the ATR. But as you can see, the jump at the ATR created at these prices here. It doesn't matter what kind of confirmation you to use, but I teach the 3 confirmations on this video. You can use whatever you want. So let's look at another example. Here is the buy aggression in this candle. It's in this green candle. The price came to cut the low of this, and then came to cut the high of this. What we are observing here, it's the big absorption right here. The price didn't took out this low here, but what you can see at the lower, the price is the cumulative volume data is pushing lower. There is a sell absorption right here. More sell volume are executed by the aggressive participants, but the buy limit orders are absorbing them at the opposite side. Look at the last one, sell aggression right here. I showed this example on the presentation also. The price came to cut this high, what you can use as a confirmation. Let's look at the first cumulative volume delta. As you can see, there is no any absorption or exertion representing right here. So let's open up the ATR, average true range. As you can see, after this manipulation, which took out the high, which is called the turtle soup. The volatility at this point is suddenly increasing. It's the low volatile right here, still no our entries, and in this candle after 1 hour you can observe the volatility are increasing. When the price closing lower right here, you can use your entry and enter the position and targeting this low. This is the low of this aggression. So now I want to show you how to add these indicators on your chart. First of all, let's move on to the NQ. It's the 1 hour chart. As you can see, it's the volume profile at the right of the chart. Let's remove them. You can use the volume profile, unhort volume profile right here. Come to the projection here and select the unhort volume profile and add it to the 18 o'clock. Right here is our volume profile. For ATR, it's free. You can add it from the indicators section. Also, the cumulative volume delta CVD is also free. You can add this one or this one for free to your chart. Unfortunately, it's the end of the video right here. Be subscribed. Stay tuned for the next lessons. Be safe.